What's good, y'all? It's HB Punch and Profit. We're going to break down price action in the Nasdaq. But before we do, like the video, comment down below. Subscribe if you're new. Helps the channel. Helps me provide you guys with free content. March 19th, 2025. If you want to see one of the live executions for the day, click on the link in the description below. Or there'll be a video card uploaded to this video. Now, if we start off on the hourly time frame and pretend it's 9 a.m. So here's our 9 a.m. candle. Let's zoom in. Okay, our 9 a.m. candle's right here. Okay, ignore all these candlesticks. Pretend that doesn't exist. All we see is that 9 a.m. on the 1 hour, that 9 a.m. candle, and this bearish SIBI on the hourly time frame. Now, we're encroaching on this bearish SIBI with this 9 a.m. candle. Now, that doesn't necessarily mean we're going to go up and fill that fair value gap every time we encroach on it, right? But we're going to look for our signals, our key signatures, the inversion and the advanced market structure shift at key time periods like the macros and the silver bullet hour. So we establish our higher time frame. We're looking for our inversion advanced market structure shift to add extra confluence. We're going to put our stop at the swing low or at your discretion. 5 take profit, 1 to 1 or more. We jump down to the 1 minute time frame. And unfortunately, I missed this trade. I was fumbling around with my kids, and I was pretty bummed out because it was such a nice setup. Little to no drawdown. But the beauty is, there's always more opportunities. I got my live execution at the 2 to 3 p.m., and there was a scalp I took on the way down before that. Okay, but here was the first setup, roughly at the 9:50, 10:10 macro, and you usually want to really be paying attention at 9:45 a.m. because usually a lot of the trades will develop, or 5 minutes before the macro, right? Because a lot of the setups are pretty much developing, and when it comes to the, like for instance, 9:50, 10:10 macro, once it hits about 9:50, boom, you get tapped in and it goes. All right, so really pay attention 5 minutes before the macro, but right around here 9:45 we get this BPR, we get an inversion, whatever you want to call it. You get the advanced market structure shift at the blue line, candle close or candle body close above it. You put your limit order at the blue line. You could put an entry down here if you want to get a better entry and risk to reward, right? But sometimes this will be a breakaway gap when you get multiple, gaps inverted. Sometimes it's either A, price is going to come all the way back down and fill the lowest PD array, or B, this is going to be a breakaway gap, and it's pretty much going to tap into this advanced market structure shift like it did, and it's going to continue on up. Now the cool thing was the last PD array before the advanced market structure shift was pretty much where the entry would be for if you were going to play this gap, right? Little to no drawdown, you get tapped in. And even if you kept your stop at the swing low, right, and you went for a 1 to 1, boom, that was a 73-point move. Easy, right? And you don't have to keep your stop down. You can keep it tighter. And you only took about 6 points of drawdown. So if you had like a 10-point stop, or maybe just put it below the inversion, the highest one in this case, it would have been a 30-point stop. You could have aimed for like a 3 to 1. Boom, very nice. Like I said, I show you this not because you're supposed to eat all the food here, right? I show you this to to encourage you that there's plenty of food to eat. You don't need all that, but it's there. There's something there for you, right? You don't have to eat all the fucking food at the buffet, but there's plenty of food to eat and fill yourself up. So So why do sometimes I keep my stop here? Well, I think it's really good for beginners, and quite contrary to what a lot of people will tell you. And I think it's good for people transitioning the style, because when you're starting off, it shouldn't be about making money as much as it is process and procedure and experimentation. When you're first starting off, you should be trying to experiment with things. I didn't start becoming profitable until I started opening up my stop loss, and that's because I gave my trades room to breathe, and I would, because I was invested in the trade and I was in it. I would really observe price action. What's going on when it comes into this first PD array? What happens when we close above this short-term high? What happens when we retrace back into the PD array here? You're investing in the trade. If you have a tight stop, let's say you kept like a 5 point stop and you got stopped out, especially as a beginner, you're gonna be looking to place your next trade, and you're gonna pretty much ignore what happened and why things happened the way they did in price action. And that's why I think it's good initially. It's only one micro, it's only $120, okay, if you get stopped out. But if you got the higher time frame proper and you get your signals, this is a protected low. Okay, most times it's gonna hold. And another thing I like about it is I can build my position, right? I can build my position and then figure out over time, you can figure out where, okay, this is where I'm comfortable having my stop just below the inversion. Okay, and I'm always going to aim for a 3 to 1. I know I have a 60% win rate. Okay, so when you get that information data, then you can tighten up that stop and come with the risk reward you're happy with and you like. And from there, it's just you let your strategy play out. And you may lose more trades than somebody who keeps it down here, right? But you'll get better risk to reward over time. And when you do win trades, you're going to win big. So it's all how you want to skin the cat. It's all how you want to frame it. For me, I know there's times where it could pull back and hit a candle body low. And you'll see an example of it up here in a trade I took. Sometimes it'll give you little to no drawdown, like right here. Sometimes it will wick, okay, back into this PD array and then continue up. And sometimes you could get stopped out, right? For me, I like having a big stop because I like building into my positions with micros. And then I can add more. From this advanced market structure shift to this low, if we pull back, I'm going to build my position, right? There's two PD arrays here, or three, right? Three PD arrays, the order block, the two fair value gaps. I could play all those. Now, when you could put a limit order at the blue line, right? Initially, let's say we pulled back to this first PD array, to the pretty much wick into the whole gap. I'm going to add another position. Let's say we even come down here to this first fair value gap. I'm going to add another position. That's 3 micros I have. Let's say we come to the candle body low. I'm going to add another position. And if I get stopped out, well, so be it. And you got to understand your entry will go lower as you're building your position. Now you're going to have more money on the line, right, if it pulls back against you, but your entry will lower as you build your position. Okay? So it's all how you want to, frame the trade, how you want to approach it. But I would start off just one micro. Go get a cheap Apex account when it's on sale and just use it as an experimentation account and focus on the procedure. Okay, and then when you get experience, oh, I'm going to keep it just below the inversion, no more than 30 points. I'm going to aim for 3 to 1s. And then you can just keep that solid like that. Boom. Or you can be the type of person that says, I'm going to pull that stop up as the trade plays out in my favor. Okay, but that was the first trade. And this is the perfect example of why I like keeping my stops at the swing high, but or swing low. We'll go over this. We had an inversion right here, roughly speaking. Not a pretty one, but it's there. And we hit a key time period or a point of interest on the higher time frame. And we get a candle close or on the 1 minute chart over this time period. So I'm looking, as soon as I get a signal, I'm taking that sucker. There's a bullish fair value gap, bearish fair value gap. We get an advanced market structure shift. Okay, and I'll tell you another way you can approach this. Okay, we get the candle body close. We put our limit order at the advanced market structure shift, or we can enter at the inversion, right? I believe I entered at the inversion in this case. Okay, so I entered when we retraced with this wick. Put my stop at the swing high. Okay, and I'm looking for half of the range essentially from 9:30 a.m. So if we get our fib retracement, here was the low of the range all the way to the high. I'm going to aim for at least half right there. So roughly around 100 points. Let's get that off. Now we get the inversion, we get the advanced market structure shift. Look at this pullback. It goes into the candle. It goes and wipes out all the PD arrays, even with the candle body close. But then look at the massive move down. Look at the massive move down. And you could have had more, right? Wicks all the way down for 156 points. Now you could have kept a tight stop. Let's say, oh, I'm going to keep that tight stop like you do, just above the inversion. Okay. Okay, so you get stopped out, but man, my higher time frame narrative's telling we should push down. It's all good. There's another signal that presents itself. Boom. Advanced market structure shift. Okay, you get tapped in twice. There's two opportunities to get tapped in. You get a wick back up here. You get a wick back up here. This acts as a breakaway gap. You can have a limit order placed at the breakaway gap, okay, just in case you get another pullback, or you can enter at the limit order, right? So I can build my position. You get tapped in at the limit order, never goes far. This is a breakaway gap, and it just goes down. There's a second opportunity to add, okay? Right here, you get another wick, little to no drawdown, as you see right here. Keep my stop, let's say just above the inversion, or I can keep it at the high, whatever one. Let's say just above the inversion. Okay, aim for at least half the range, roughly speaking. Say we went for like 100 points. It's ridiculous. Look at that. Beautiful. Okay, so that was there for you. But I just sat in my position from this one. I didn't get stopped out. And beautiful trade to the downside. Now here is the live execution I took. This was a tricky one because it looked like this would be the move. Okay, we hit a higher time frame PD array. Okay, we come down here. We're looking for our trend continuation and take out these highs. Okay, but before it does, we get a wick. So we take out these relatively equal lows. Okay, you get this inversion from here to here. You don't want to freak out and jump into the trade. Once you see this move, you get the advanced market structure shift. Candle close above it. We wait for a retrace back down. Okay. And what did I do in this position? All I did was build. And this is why I love my stops at the swing low sometimes. Not all the time, but sometimes. Okay. Here, and we say, let's say it's a 1-to-1 that we're aiming for, even though we're aiming roughly for these highs. So that's what I was aiming for because I was looking for the trend continuation. That's 90, roughly, it was a 90-point move for me. Okay, so we get this candle body close. We have this wicked retracement. We get tapped in first at this advanced market structure shift. That's my first entry. Okay. Then we come down and fill the PD, or we fill the bullish fair value gap that penetrated that advanced market structure shift. Okay. Then we come back up and we have another inversion. Boom. Okay. And this is the clean one. Advanced market structure shift. I add right here. Okay. For that second signal. Okay. So it's a nice, more confirmation. When you get a second confirmation, you can add. Right? And that's the beauty of it. Let's say you kept a tight stop. You wanted to keep your stop loss just below the inversion. Right? Let's say you were here and you wanted to keep it just below the inversion. Unfortunately, you got stopped out. Right? And look at this massive move on the way up. Look at this. Look at this. I'm not saying you should have hit all this. I'm just saying you go to buffet. There's plenty of food to eat right here. Don't be a fat ass and try to take everything, but there's plenty of food to eat. But that's why I like keeping my stop loss at the swing low, because sometimes you get stopped out. Now that's okay. Let's say you did get stopped out. You kept a tight stop for 30 points. It's all good. You get the second signal, okay? And usually that's what happens. Sometimes the market is cruel. It'll try to wick you out, and it did it like twice here. Takes you out, and then it presents another signal. You're right. It's just that's how the market. That's how they do sometimes. You know what I'm saying? They stop you out. Boom. You get a second signal. Advanced market structure shift. Okay, this acts as a breakaway gap. You put a limit order at the blue line. Ooh, and see, that's where it's so brutal, man. That's where it's so brutal. Maybe you would have gotten tapped in here, but that's why I like keeping my stops at the swing low, right? If I'm confident in my higher time frame analysis, I'm gonna trust that this swing low holds because sometimes you miss out on massive opportunities because you keep a stop that's way too tight. Just scale down to micros. So that was the day. HB, punch profit, comment down below, like the video, subscribe if you're new. Peace.